Hey, this is David McCree, CPA. I am the nonprofit tax guy, and I want to talk to you today about a story that I saw recently in a Florida newspaper. It's about a dog rescue charity that has been accused of paying the personal expenses of the president, diverting money that was supposed to be used to save dogs to pay personal expenses of the president. Now, I don't know what the truth is. I'm not accusing this organization of doing anything wrong. I don't know what the truth is. It may be that expenses were perfectly legitimate, but I just want to show you what can happen if you don't have really good and tight accounting, or if you engage in transactions between an officer or director and the charity. So here it is, questions raised regarding the use of funds for abandoned dog organization. We'll just scroll down here and see the Florida Department of Agriculture and Consumer Services. Now that's the organization that registers and monitors charity activity in the state and fundraising activity. They say that there appears to be more than $98,000 from the rescue's bank account that was used for personal purposes. And here they talk about what those are. 960 debit transactions, which included almost, a little over $34,000 on food and restaurant expenses, purchases at Best Buy, Bed Bath & Beyond, and Bath & Body Works, $10,000 to pay off a personal credit card, almost $7,000 for car payments for the president, and $4,700 on insurance payments, which I'm assuming was for the car. Then there was, the state also says there was a $30,000 loan from the rescue charity to the president to help her buy a BMW, of which it says she paid back $20,000. Now, a lot of these expenses could be perfectly legitimate, just sloppy accounting. Although I have to say some of those things don't look too good, and in particular the $30,000 loan from the rescue to the president. I don't know about all states, but in Florida, it's illegal for a charity to loan money to one of its officers or directors. So I'm not going to dwell on this particular charity anymore. I like to show you that I did a quick Google search on Florida Dog Rescue Charity Investigated. That was a search phrase, and I got 2,580,000 results. Of course, a lot of those are duplicates and various things. But you can just scroll down here and see that this one particular charity certainly is not a loan in sloppy or misspent funds. So I want to give you some tips on if you are a charity, small charity especially. Those are the ones that seem to get into trouble like this the most. I want to give you some tips on how to avoid this type of press. So the first tip here is to have the board of directors adopt a written accountable reimbursement plan for reimbursable expenses. Expense reports with receipts should be submitted for reimbursement within 30 days. So if you've got people in the organization paying for the organization's expenses out of their own pocket and they want to get reimbursed for it, there needs to be a written accountable reimbursement plan. That's the IRS rules, and they need to turn in their receipts. Like an expense report documented with receipts, not just invoices, not purchase orders, but actual receipts showing that the money was paid. And they should do it, within a reasonable period of time, because what can end up happening is you end up with duplicate expenses, sometimes expenses being reimbursed more than one time. Okay. The second tip is the charity should never loan money to an officer, a director, or an employee, or anybody that's related to any of those people, or to any organizations that are owned by any of those people. Okay, that's just not good. The charity should not be loaning money to people unless it's part of their exempt purpose. Making small business loans or something, then that's a different story, and that's beyond the scope of what we're talking about here. Number 3. If And I don't recommend that you do this, but if an officer or director allows the charity to use his or her personal credit card to pay for the charity's expenses, a loan payable to the officer or director should be recorded, and the amounts and purposes for the expenses should be carefully documented to make sure that they are for charitable purposes. The charity should never make payments directly to the credit card company. Okay? The loan should probably be interest-free or at least very low interest, and the transaction should be approved by the board of directors. So essentially, I hope you can see that if you're the president and you're allowing the charity to use your personal credit card, you're making a loan to the charity. Okay? And if you don't expect to be paid back, then it would be considered a contribution to the charity. Fourth tip, the charity should never, ever pay anyone's personal expenses. And when I say anyone, I mean anybody that's related to the charity, you know, an employee or an officer or director, something like that. Not even in lieu of compensation for services, right? You can't say, well, I didn't take a salary, so I had the organization make my car payment for me. No, can't do it, all right? All payments that are to be treated as compensation must be approved by the board of directors in advance, and they have to be reported as compensation on Form 1099 or W-2, and also on the Form 990 when it's filed. Okay, and you know there's a whole body of law regarding compensation, and you don't want to go down that road. Okay, follow that advice. And another thing is nobody should ever use the charity's sales tax exemption certificate to purchase personal items tax-free. Okay, so you go into Walmart or whatever and you're buying some supplies for an event, fundraiser, you know, don't pile on some, you know, personal purchases just so you could get it tax-free. Okay, can't do that, against the law. And I don't know how it is in every state, but I know that in Florida, if you're making an exempt purchase like that, and you're presenting the charity's sales tax exemption certificate, you actually have to pay for it with a check or, you know, debit card that's in the charity's name. Okay, you can't pay for it with your own funds. You're not supposed to. Right? So I hope those are helpful tips. Hope it keeps your organization out of trouble. This is David McCree, CPA, the Nonprofit Tax Guy.